Hello and welcome to this week's Wow Crypto Update. So what's happening in the macro? What does it mean for crypto? Let's have a look. So of course, the big news again this week is coming from the Fed, and Jerome Powell holds steady, but cracks are showing. What does this mean? Well, let's have a look. So Powell has reiterated that the Fed is well positioned to cut rates when needed, but dampened expectations of a September rate cut without closing the door completely. So first and foremost, they've held steady. There was no rate cut. This was expected on the run-up this week that there would be no rate cut, but there was a lot of expectation that there would be one by September, which of course is in 2 months' time. However, following what he said at the meeting, that the odds of that have dramatically reduced, and now there's a feeling that there possibly won't be a rate cut in September either. And of course, the markets reacted negatively to that. And the likes of Bitcoin has come from 120 plus down to around 115,000 right now. We'll have a look at the chart in a little while. But what does this all mean? Well, he has said we're still a ways away from seeing where things settle down. Yes, we are learning more and more. It doesn't feel like we're very close to the end of that process. So in other words, he's saying, we don't think we're at the end of the process. We're keeping an eye on. There are two main things they look at. Are one, inflation. He's saying, well, there's a lot happening with tariffs at the moment. Of course, the deadline is the 7th of August. There's been significant announcements over the last number of days. I expect there'll be a lot more in the next few days, creating even more volatility. So it's they're looking at that and going, okay, they believe it's likely that these tariffs will have an inflationary aspect. So it'll turn inflation back up again. And of course, if inflation's going up, they're highly unlikely to increase interest rates. Increasing interest rates is when inflation is down and the economy is weak. At the same time, the economy is showing strength, much to the surprise of the majority of economists and my own surprise. So, what are we seeing? President Trump is unleashed a flurry of tariff deals and demands ahead of an expected August 1 deadline. This includes a surprise on India, where he put in a 25% tariff. Many were expected to be 15%, which would have matched many other countries, including Europe, which I'll touch on in a second, and a 15% on tariff on copper. And the price of copper reduced dramatically in the US off the back of that. I think it was 20%. With US copper futures crashing, 19%. It's actually written in front of me. So there you have it. Trump is coming out with many more tariffs, many more announcements. Of course, there was an announcement on European tariffs where now the majority of the goods going from Europe to America are going to have 15% tariffs on it. And coming the other way, a big fat zero tariffs coming the other way. On top of that, there's been an agreement of 1.4 trillion of deals where Europe are going to be spending on American assets. This is an incredible deal for Trump and for America. Whatever you think about Trump, he's definitely a deal maker. He's made an unbelievable deal on behalf of the US. European, and as a European, not such a great deal on our side, but Trump knows how to make a deal, and he certainly knows when he's got the Trump card, pardon the pun, and he knows how to play them, and he's certainly got an amazing deal there, and he appears to be getting good deals pretty much around the world. They've put off the deadline with China and put off the deadline with Mexico. Europe is the biggest individual trader with the US. They've their deal done there, but with the next two, they've delayed the timelines. On everyone else, deals seem to be coming thick and fast. And if those deals are not done by the 7th of August, at least this is what they're saying, then the blanket percentages will be put in around the world. The reason he's given for putting a 25% tariff on India versus 15 as was expected is because they are trading with Russia, and he's trying to apply more pressure on Russia to bring peace in Ukraine. So there you have it. But the main point of all of this is there's much more of these announcements to come over the next week or so. Expect a huge amount more volatility. And of course, back to the Fed are saying with all this happening, it's highly likely this could cause inflation, and therefore we're not reducing interest rates just yet until we see the fallout of that. And then on the other side, as we mentioned, GDP growth numbers blew away expectations from 2.4%, actually coming in at 3%, which which is a huge difference, and dashing forecasts of the bears. So basically what this is saying is, if they're looking at, reducing interest rates, one of the reasons they would reduce interest rates if the economy is poor. So they would be looking for a poor economy and for interest rates to be reducing. What we're actually seeing is the potential for inflation to increase, and the economy is showing strong. Neither of those would lean towards cutting interest rates, and therefore the market has reacted negatively to this overall news on the back of the fact that it looks like those, not only did we not get cuts yesterday, it's unlikely we're going to get cuts in 2 months' time in September. So what else is happening? Well, the US dollar index. So a weakening dollar is usually good for risk on assets. The dollar has been weakening since pretty much the start of the year. But you can see it's had a significant bounce in the past few days. And significantly, it's gone over the 100 mark. Now, if this could be just a relief rally in the overall downtrend, and if it is, it continues as it is. But the significance here, if it gets above 100 and holds it, there's a possible this could be a reversal. And if it goes into a strong reversal, this could be a headwind also against risk on assets in the near term. What else have we heard? So that's the macro and how the macro might affect the overall. What's happening within crypto? Well, it's just been announced that there are now going to be in-kind ETF redemptions. What makes this a big deal? So in ETFs, I'm a big fund or institution, and I put $1 billion into Bitcoin ETF and Ethereum ETF. The providers, so let's say BlackRock, of the ETF will then take that $1 billion and buy the underlying assets. So let's say it's Bitcoin. So they now buy Bitcoin. So that's big buying pressure on Bitcoin. Up till now, if at some point in time down the line, as that institution, I now want to withdraw my money back out, then the likes of BlackRock would have to sell that Bitcoin and then give me back my $1 billion. What this ETF redemption news means is, in that scenario now, I as an institution could choose to either get that back in dollars or get my equivalent in Bitcoin, which means that Bitcoin doesn't actually need to be sold now in order to take my value out of that ETF. That reduces the potential for sell pressure. So the same amount of buy pressure, but certainly the potential for reduction in sell pressure. And as an institution, if in my withdrawal out of that ETF, it is beneficial for me to take it out in kind in the Bitcoin, because it doesn't create a sell and therefore doesn't create a tax event. And so it's in my interest also to take it out in Bitcoin rather than in the dollar value, having that Bitcoin being sold. So it's likely what this means is continued buy pressure, maybe even more buy pressure on the back of this news, and potential for much less sell pressure. And of course, that tends to be good for the overall price. So this is big news. On top of all of this, we have the SEC, the new SEC chair, Paul Atkins, unveil what he's calling Project Crypto. What's in it, or what has he said? Well, he has said, despite what the SEC has said in the past, and we know we've seen there before, most crypto assets are not securities. But confusion over the application of the Howey test has led some innovators to prophylactically treat all crypto assets as such. In other words, it's always been saying, basically all cryptos are securities. Now he's saying, well, the vast majority actually aren't. This is big news. Under the Project Crypto, the SEC will create new exemptions and safe harbors for ICOs, airdrops, and network rewards. This was usually gone after by the SEC before. Now they're creating exemptions for it. They're drafting fresh rules for crypto custody, staking, and trading. They're supporting self-custody rights and the development of crypto super apps. They're introducing a new category for DeFi, protecting developers and code publishers. They're exploring how crypto asset investment contracts could trade on unlicensed platforms. So a huge movement towards people creating all around crypto, something that was completely gone against in the previous head in Gary Gensler. This isn't a tweak, it's a total reversal from the Gensler era. So this is huge news. And here we have Hasib, and he summarizes it like this. The new Project Crypto is the most bullish thing I've seen in a long time from a regulator. Read the speech, it's incredible. Almost all tokens are not securities. They want to discourage decentralization. Americans should not get excluded by IP or VPN blocks. Explicit exemptions for ICOs, airdrops, etc. Non-securities should be tradable alongside securities on the same platform. Protect software engineers. Streamline license requirements, innovation in exemptions to protect builders pre-decentralization. And you could even say we get a shout out here because he says, wow, 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 wow. Maybe he says now is the time to be a part of the wow community, because now we believe things are really starting to heat up in the overall crypto ecosystem. The SEC is rewriting the playbook, and this time crypto got a seat at the table. Big movement. So what else can we see? Well, we created a phrase many months ago where we said, absolutely, Bitcoin is the king. But what's the keys to the kingdom? We said Ethereum when no one else was talking about Ethereum, and with the exception of saying that it was dead. Ether is now on the move. And Ether, a 90s tech stock, ends July with the biggest gain in 3 years. Ethereum has witnessed a surge of more than 55% this month. This is the first time in 3 years that Ethereum has given a return of 50% or more in a single month. What's happening? We have always stated that what would truly show if we're moving into an altcoin season is when Ethereum moves strongly and gets above or moves towards its all-time high. It's currently at a key position of around 3,950. Now it's pulled back from there a little bit since Bitcoin has. But if it can break that and hold above it, then it's likely we're going to see Ethereum surge even further. And if that is the case, then it is one major indicator that we're moving into altcoin season. And it's for everyone that's either invested or considering investing into the altcoins, now certainly would be a good time to at least know what you want to buy into, or if you have bought into, maybe there's time, an opportunity dollar cost to average in. Not financial advice, but just something that's worth noting and something we were most certainly looking at ourselves. But of course, as always, there is that warning sign that should be taken into account when addressing all of that. We certainly believe that there's many factors now pointing positively towards altcoin season, and I believe the only thing that gets in the way now is if there's a major happening within the overall macro environment within the US and elsewhere, that if that stays steady, then it looks like altcoin season is very much underway from here. But of course, that's a big if. There is the potential for a big shock and then therefore a big pullback overall. And here's another sign of that potential weakness. Upper income Americans are increasingly falling behind on credit card and auto loan repayments. Delinquencies from those making at least 150 grand, so not exactly a small amount of income, annually have jumped almost 20% faster than the middle and lower income borrowers. We already know the lower income borrowers have been struggling for years. Delinquencies and loans, particularly now when student loan debt is back on the table, now we're seeing more car loans, more mortgages, payments not getting paid. Now it's starting to hit higher income earners as well. What does this mean for the overall economy? It's something we absolutely need to keep an eye on as we move forward with a very positive belief system in what's happening in the overall crypto space. Hopefully y'all found that useful. I'll talk to y'all next week.